So that was our coaching session, and I hope it's helpful, right? I like to give you good, honest, at least how I trade, tips and insights from doing this for a lot of years. I trade every day now, so I've learned mostly day trades, a few swing trades, but mostly intraday right now. Anyway, welcome aboard to our live Trading Week Ahead broadcast. I'm Ken Calhoun, your host, president of the original Day Trading University and Trade Mastery. As always, all information is for educational use only. So, I've got this new winning swing trading charts. Hot blonde not included. Bada bing. He's got it. I still got it. It's fun. Anyway, ching. And no, she's not my girlfriend. But the point is, I digress. The winning swing trading charts, I've been working my tail off getting this ebook ready for you guys. I worked on it many hours this past week. It's now good to go. It's downloadable, and you folks are the first to get it absolutely free. And it mostly gives a lot of examples of the swing scans charts from the last half of last year. So I'll be coming out with a volume 2 and subsequent volumes moving forward. Watch for these also on Instagram ads and Facebook and the rest of it as well. So my competitors are going, oh crap, he's going to kick my butt. Yeah, I am. I like to dominate. I got that from being an undergrad at UCLA back in 1982. I'm fiercely competitive, and I back it up with real money trades and P&L proof, and intelligent, thoughtful techniques, which you can get by downloading the Winning Swing Trading Charts ebook. It's just all you have to do right now is being here in the live event is just click on the handouts tab, and it'll say 2 of 5. You can get both this and the presentation deck from my tape reading revealed event, which is now a downloadable course as well. So that's absolutely free. You're welcome. And also tape reading revealed. I've got a coupon code TAPE, T-A-P-E. The downloadable course is now available. It includes the PDF that you guys can download right now, but also the video, which is the more important hour. We ran at a lot of questions, too, a lot of smart questions. We ran a full hour and 33 minutes on the live tape reading revealed session, and I was doing live real money trades and showing P&L proof with the tape, so you could see exactly how to use time and sales to manage real money trades, which I was doing in front of everybody. It really is amazing. You learn so much, and it's only 97 bucks plus. It includes a couple weeks access to the live room. And for those of you who had registered for the Thursday live event, and for all of you who order this today, again, the discount is only good for a couple of days. Just click on the support tab and you'll be good to go. So tape reading revealed, that's one must. I haven't done a tape reading premium session in a couple of years. I'll pick that one up. It's only 97 freaking dollars. You know, it's like the cost of a stop or two. And get this, it's absolutely free. And no, she's not my girlfriend. But the point is, you can look at the PDF on a cell phone. That's kind of an old cell phone, or print it or whatever you want. So, tape reading revealed. We looked at re-enter and after a stop. Sequences and sets versus solo trades was one of the topics that we covered earlier in an earlier coaching session, and loose versus tight stop losses for swing and intraday trades was the next. So, what's going on with this wacky market? Let's start off with as always, with our S&P so we can see exactly where price action is going in the stock market. You can see our S&P continues up. It had dipped a little bit back on Thursday and Wednesday, but it recovered new highs yesterday. So the market's still in an uptrend continuation. Unless it loses, say, the 2,900-ish area, that would be a key support level right here. For those of you who do very short-term trading, use 2-day low as the proof of concept of break of support. So if we get under, say, 29.10, that'd be the first place to start going short the market, or at least scaling out of open long swing and position trades. If we lose 5 days support, say under 2,900, that's major or more major. And of course, the S3 level would be here at the 2840 on the 50 SMA. But we have a golden cross, right? The 50 SMA broke the 200 SMA. So we got a golden cross back on the end of March, and that's why it's been running up all of April, right? So we're heading into the end of the month here in April, and we'll see if the markets continue to rally. Oh, thanks for the kind words. Let's see, a question from Fernando. Can you use tape reading on TOS? As long as it has time and sales, yeah. I customize my tape so it's easy to read, which I recommend all of you do. Customize it, don't be lazy. Don't use the default is usually what leads to losing trades on any platform. You really have to give yourself an edge. And as an industry pro, I can tell you a lot of my edge as an active trader and all the many millions of dollars worth of stocks and ETFs I've done since 1999, I could tell you customizing your charts to your personal preference, whether it's white or black background, the sizes and color of the candles, the size of the fonts is really important, by the way, so you can visually see signals as they emerge. Customize your trading platform to your own personal specifications and take some time at it because it's your workstation, it's your tool. The default is coded by who? Just a quick common sense, but the default trading workstation layout is coded by A, people who trade for a living, B, software engineers who are programming nerds. Wait, I shouldn't say nerds because I'm a nerd, so I'm a total, my wife from Japan would say otaku, right? I'm a total nerd too. But the point is, the default settings for software and charting platforms are not generally not designed by traders for traders. They go through a review process, but generally it's not people who actually know how to trade that design the trading platform. So you need to have the savvy and the street smarts to customize, like I do extensively here on my eSignal platform, a very good, useful, workable, it works for me, right? You've seen how well I've done in my trades. Customize your trading platform. Anyway, to the charts. We looked at PPC. Let's move on. That's one of my swing scans alerts earlier. What I cover for you guys is alerts that kind of like they got it on the way up. You guys get it kind of after the fact, but you can see these are still good charts if they continue on up later, right? So that's why I picked them. So they're still useful, but also to hopefully interest you in becoming a Swing Scans member. If you're not, you've seen how well my alerts have worked, right, for years. If you looked at the percentage of winning alerts, you'd be amazed, right? In all my services, getting it right is important. And it starts with the right patterns and the right charts that make sense on your terms in a way that makes sense for you personally, that helps you identify good winning breakouts and also when to get out at the first sign of trouble. So we have some flat candles up here and a shooting star, a doji, another bearish upper shadow. So it's slowing down, but it's worth a shot up at a new high if it's able to take out a whole number. So MRVL, another one. For my small cap scans members, they were given CPRX is one of our picks from earlier. You can see it's ran all the way from 320 to 6. By the way, do be sure that you use whole number resistance to help tighten in trailing stops to lock in your profits. Whenever I'm in a winning trade, I want to take the money and run and then figure I can always re-enter if it comes back to life later. And usually I would say maybe 2/3 of the time it was the right decision to get out sooner rather than later. Another third of the time or so, maybe it keeps running up. I'll re-enter. And often I get stopped out on the second try because maybe that's the high of day or a high intermediate part of the day. But later in the day, I may re-enter or a subsequent day for a swing trade. So anyway, that's a good profile for the charts. CPRX. And another one that you may want to pay attention to is BRFS. This is another small cap scans members alert that they got earlier before the big run. So, if you're not a member of Swing Scans or small cap scans, try them out. I've got money back, trials that are inexpensive and give you good, honest, real look at these services and see if they're right for you. So try them out. I guarantee you'll be satisfied. If not, I'll give you a trial back. So, hey, you risk nothing. Absolutely risk-free. You see why so many hundreds of people are members, because it's smart. What else is going on? Oil, crude has been dropping, right? UWT took it in the shorts yesterday off 6.7%. Boom. So crude oil is making an official reversal. Name that candle pattern. And for more on candles, learn exclusively from Steve Nissen at candlecharts.com. I'm very loyal to the guy because he's helped me make so much money, right? And he knows what he's talking about. So there's a lot of copycat candle people out there. Like there's a lot of copycat day trading people. People copied my university idea and blah, blah, blah. Anyway, get over it. Competency gets copied, but cream rises. Anyway, that is right. Fernando, Mira, Deanna, Mukesh. Yeah, right. Bearish engulfing, right? Question from why do I not like to swing trade short positions? Because of the unlimited upside overnight risk. Let's say, I know it's maybe low odds that would occur, but if, there's a gap up because of good news, or there's a buyout rumor and the thing spikes up 8 points and you're short 500 shares, that's not a good thing. So I don't swing trade short. I will short the market by swing trading the inverse ETFs like TVIX and QID and SDS and others I've traded for years. But anyway, so with UWT on the down tick, on the down low, it's opposite. DWT has been going up. So that, friends, is that's good and valuable intel. Small followed by larger whole red body candles. And look at this. Somebody's betting the farm, right? 16 million yesterday in volume. So we got a high volume pivot in DWT. This goes up when the price of crude oil goes down. So we may be at a pivot point in this instrument. This is another bullish engulfment here. Barely, but it's a bullish engulfment. And then we see a very, very barely, but it got the party started. And the main thing is we got a high volume candle here. So DWT may be a play for a long upside move if crude oil continues to barrel its way down, so to speak. I love this stuff. A few minutes left, and that was the chart yesterday. Let's take a look at some intraday charts. Was anybody trading Hexo yesterday? That was a good breakout chart for intraday, right? Going from 720 up to 780. Maybe worth a shot for next week. We'll be covering this and all of these and others, of course, whatever the daily gappers are for momentum plays in the live room. We've switched our focus to, by popular demand, to primarily covering small cap gap continuation plays. For years, I used to not trade those because they're notoriously choppy because not many people traded them. But now, because they're so popular, they do finally start to have the consistent. They're still not nearly as good as things like, say, I like the stocks like Twitter and Momo and Micron and AMD, and I like stocks in the $20, $30 share range for intraday trading for the most part. But we got a lot of small cap runners that are worth a shot too. ZYNE, a nice runner from 10 to 1180, and a mean reversion pivot back down to the midpoint near right near 11. So that's on the radar for next week. The pot stocks had an unexpected run up. See, I took a stop loss in this one. I got stopped out. One of my traders told me about it back when it was up near 17, and I appreciate that. And I said, okay, I'll take the shot, but on the pullback, I got stopped out. So I take stops every day as well as taking wins. But anyway, the pot stocks are a good sector to keep an eye on because Kronos is one, a little pricier. Canopy Growth, my favorite day trading pot stock is CGC, and you can see it ran from 48.20 all the way up to 50.40. So nice 2-point run. There may be more to it. PetX was kind of a sleeper. It didn't do much. It gapped and went sideways for most of the day. So maybe worth the shot if it ever breaks over 5 at some point. TVIX, I knocked it out of the park on Thursday and early yesterday, but I got stopped out trying to trade a couple of bounces. I'm very candid about my stops. I'm not like, hey, I always win, like some of these people out there. I take stops every single day, but I also make wins. So the goal is to make more in your wins than your stops. A good end of day play is, we didn't see it yesterday. I got in long here, and I think it was like a break even or small stop, whatever. It started to pivot up. It didn't really get legs. Thursday, I traded it successfully on both the breakout as well as on the end of day pivot. And often you'll see an end of day pivot. That's another quick tip here on institutional, either short covering or speculative long trade. So if you do day trade or as a swing trader, always keep an eye on the close. Mostly want to trade the open because that's where most of the money is at. So hence the name of my trademarked live room, Trading the Open. But there's often a secondary spike up that's good. This guy ran up 50 cents here, and it ran up a lot more a couple days earlier. Look at the end of day for potential trade opportunities as well as the beginning start of the day. Okay, and another one that had sold off quite a bit yesterday, RHE, the ticker. It ran all the way up to 3 and then sold all the way off back down to 2. So trying to buy bounces in the cheap stocks is usually not a good strategy. I have found the hard way. Usually it will run a little bit, but not enough to make it worth your while. What you want to do instead is do like I teach in the live room, starting at 9 o'clock every single morning, 5 days a week at Trading the Open. We look for the small gappers pre-market, and I use a variety of scanning lists that are available to me, and I spot the best, 2 or 3 each morning for everybody with the small gap. Small gaps are the best ones because they have the best trade potential. Anything that's gapping slightly, even just a dime or something above the previous day's high, often makes for a good run. And this guy ran all the way from the 2. You may have seen my award-winning articles in Stocks and Commodities magazine, including the one in which I say it's a smart idea to go long, say 20 cents or so above a whole number, then sell at the 90-cent mark or so underneath the next whole number. It's kind of like the answer key to this chart. As you go long, remember that play. Go long, say 20 cents above a whole number with an exit target at the 80 or 90 cent mark within that whole number trading range. So I will often go to cash. Even if it keeps spiking up, I'll tighten in the trailing stop to more accurately to a dime or so under the inside market. Oh, thanks those of you who are ordering. I appreciate the orders. Hey, it's always great to see you here. So anyway, that about does this for this week. We've got some really good charts as usual. Stay frosty out there. Trade smart. Try and make some money, and remember to swing trade things that are consistent. You wouldn't swing trade this chart. At least I wouldn't. I like swing trading charts like this that have more consistency. But day trade the charts with the volatility. Swing trade the charts with consistent breakout patterns, right? And that's at least I found it helps me make the most money in my trades, and hopefully it'll help you do well also. Got a couple of minutes left here for Q&A. Let me see. Wow, we got a lot of them. I apologize in advance for not being able to answer all the questions. Oh yeah, the social proof thing. We got 55.94. We still haven't broken the 5,600 resistance area. I win some, I lose some, but overall, a lot of people registered for these, so I appreciate all of y'all's enthusiastic participation. Oh, thanks, Ahmed. I appreciate it, man. Top 2 strong sectors. It would probably pot stocks would be one, and a short the crude drop would be the second. Those would be the biggest industry group plays. So I'm going to go long DWT, and I'm going to buy CGC and CRON if they continue in trend. A good, smart question. Question about another follow-up question from why not swing trade short? What if you place stops? Well, you can't place a stop on a short if it gaps up through your stop, right? It's not a real-time exit. If you go short something, say it's at 20 and you go short at 19, but then there's good news or a buyout rumor and it gaps up to 26 the next day, you're screwed, right? You have no way you can't put a stop at 21 or something like you could, in an intraday chart. So that's why I don't short overnight, because that could go badly if you get good news. There's unlimited upside risk. You blow up your whole trading account and end up owing the broker money. So I don't play unlimited downside risk if there's an upside gap on a short for swings. So a smart question. Hey, Tom's asking what we're saying about the 45-degree angle run up. That's the single best chart pattern, is the initial 45-degree angle breakout that's starting to run. That makes for a good trade setup for long. So if you start to see, and I call that an acceleration ramp, if there's a prior slight, like a 15-20 degree of arc uptrend that then hockey sticks up to a 45-degree angle, especially when accompanied by higher volume. That often makes for good entry for a successful swing or a day trade. So that tells you there's enough strength. The worst breakouts are ones that go like straight up, because those are the weakest breakouts, just like the worst. The best bounce trades are if something sells off sharply and starts to pivot, right? Like I was trading Dust successfully last week on its bounces because it had sold off sharply and was starting to bounce, okay? And same thing with TVIX. After it sells off sharply, I'll buy a pivot, and often that's a really good pivot long. So the sharper the angle of slope, the overall weaker from a sustainability standpoint that breakout or breakdown is. The more close it is to a 45-degree angle, the stronger it is. So you should not ever short something that's a 45-degree angle breakout, and should not try and pivot long something that's in a 45. And this is very useful intel. Copy that in a 45-degree angle sell-off. The bounces are usually no good. If it's a sharp 90-degree drop, to a whole number of support, that's usually a good bounce play. So smart questions. I appreciate it. I got so many smart traders here. I'm out of time. Wanted to thank all of you for being. Thanks, Andy, saying, Ken, I admire your honesty and transparency. Happy trading. You too, man. From Canada. Question from Fernando: is there membership that covers both day and swing trading? Yeah, well, there's the live room is mostly intraday. Swing scans is for swing trading. So they're separate for now. Hey, Chris, the discount code for the tapereadingrevealed.com is TAPE. So thanks. It's a good CTA way to wrap things up. Call to action. So go to www.tapereadingrevealed.com. That'll forward you over to the page inside my Trade Mastery site. And you can order the course. It's a total bargain. It's only $97, and that includes a couple weeks in the live trading room. So that's another 15 hours of training for you, plus the hour and a half live event we captured. Really big turnout for that on Thursday. So anyways, order now. Operators are not standing by, but the website is. So anyways, you guys take care and trade smart. Swing Scans members will continue on with even better charts coming up in a few minutes. So till next time, take it easy and trade with passion, or at least with intelligence. Trade with tight stops, and let's go get them.